Good morning, options traders. Steve Ganz here, and I'm going to continue with a start-to-finish trade that I opened in FDX a number of weeks back. So what I want to do on this, I think there's some really great learnings here about how to modify or adjust a trade during its duration. So we can see here the chart pattern on FDX. And I had entered this trade all the way back in here somewhere, and I'll walk you through the progression and the different adjustments. But there's a video on each one of these, so I urge you to go back and just look at the three prior videos: the opening of the trade, the first adjustment, the second adjustment, and then today I'm going to make what I think will probably be the final adjustment on this trade to juice it even further. Now, I'm going to ask a favor of you too. If you like this content, if you find it of value, please like, subscribe, give me a comment down below. Let me know so that I know that this is the sort of stuff that people are wanting and liking to see. So using optionstrat, going back to when this trade was very first opened, this was back in, it's a June 21st expiration. This was opened back in March. My premise at the time was that FDX was not going to go significantly lower. So I did this particular trade, which I call a breakout for free. I'm not going to dig into it deep here. It's not really for free. Let me be clear on that to begin with. But it has a very wide, this could have gone down to 230, and at expiration, I still technically would not have been losing money on this because I'm selling two puts and I'm using that money I'm bringing in to buy one long call. So it's a breakout for free for a while. But anyhow, my premise here, all the way back on March 22nd, if we come back to March 22nd, it was right in this general range, was that it wasn't going to be going lower. I expected it to hold in that area. So this was the original trade, expecting it to move higher. Of course, it has moved higher. But after a period of time, the market had moved up, so I was able to buy back those two puts for basically pennies on the dollar. And the reason I was able to do that is because there was this monster gap here to where FDX had great earnings and it gapped up. So when it gapped up like that, my trade was a bullish trade to where my long calls gained in value. My short puts, which I obviously had sold short, lost value. So I was able to take those off, remove any downside risk at all. So at this point, this trade has no risk of a loss on the trade. This could certainly fall back from this point down to this $942. So I could give back some of my profits. But at this stage, no matter what happened, this trade was going to be a profitable trade. So I bought those things back after that big gap up on earnings. Now, a few more days went by, and I decided to basically sell a call spread. I was feeling like, you know what, I can juice this trade a little bit here by selling a call spread, bringing in some additional premium, and my call spread centered here at 290. So as we can see, my premise was that FDX might get back to 290, but I was thinking because of prior resistance here, and there was even some further back, it probably wasn't going to go much above 290. So when we were up in this area and I could get a fair amount of money for that short 290 call and then buy a further out 290 call to basically create the structure here, I was okay doing that. Okay, that's a no-brainer in my mind because I expected FDX to either stabilize at 290 or possibly pull back. Now you'll notice when I made that move, my worst case scenario was to have $942 in profit. But after selling this call spread and bringing in some money, now my worst case scenario is $1,600 in profit. My peak profitability also increased. It went from 3,900, and I'm not shooting for that 3,900 target. I want to be clear on that. But it went from 3,900 to about 4,600. Okay? So all good things, but I added in some upside risk. In other words, prior to selling this call spread, if the market continued up, I'd have $3,900 in profit no matter where FedEx went to the upside. After adding that call spread, if FedEx went up here to 310, I did reduce my upside potential, if you will, on this trade. Now, let's look at where we're at today and a move I could make. Oh, the other thing I want you to quickly look at. Let's take a look at this trade had I not adjusted it. So if I just had on the original trade, had never adjusted it, I'd be up $1,500. I would still have a lot of downside risk. Now, adjustment number one puts us at $2,300 in profit right now, and I have no risk of loss. Okay, very important here. Then the next adjustment, by making that adjustment, well, this trade is now up $2,700 in profit. That's because I've got now an extra call spread that's decaying along with me. I further reduced my downside risk. Now, let's take a look at the last move that I'm thinking I might make here. So this is our trade. This is as of today, and we're right here. So we're up nicely in the trade. But I no longer personally have an opinion that I think FedEx is going to get back to 290. I think it's likely, if it rallies, it's likely to get more back to maybe 280 during the balance of this trade or the duration of this trade. So based on that new premise, I am interested in potentially shifting the peak of my tent down to 280. And let's see what that does. So how do I go about doing that? So how I would do that is I'm going to come in and I'm going to sell a 280 call, and I am going to buy back one of my 290 short calls. So this is essentially creating basically a new spread, or I'm again buying one of these back and I'm selling a lower one. So let me just come in here and I'm going to buy to close. And yeah, I'm just going to go on the mid here, the bid-ask spread. So I'm just going to buy to close at the mid. And then this is now our new trade. Now, I can also move this around a little bit. I said 280. Let's see what 270 looks like even. So 270 is going to make the downside, I'm going to have a maximum of $2,400 in risk to the downside. I have increased my upside risk if we get past this 290 mark. But again, my premise is that I'm probably not going to get past that 290 mark. So I can take a look at a couple different possibilities here. This one at 280 gives me a little bit of a higher peak, if you will, in here. It also reduces my downside risk so that I'm guaranteed of almost a $2,000 profit here to the downside if the market were to sell off significantly. I'm the same on the upside. So this is an equal condor at this point. And again, let me just see what happens if I come down to 270. If I come down to 270, my downside risk, I'm looking at about $2,400 in profit as the maximum downside risk. You can see I've reduced my peak a little bit here because the decay is going to be a little bit different than it would be if I left this at the 280. And this one is a little bit odd because you can see that my short strikes are overlapping each other here. Some people call this going inverted on one of these. I don't want to get too deep into that. The important thing is we can look at the model here and we can see what the different possibilities are. I'm going to go ahead and shift it to here just because as I'm looking at this, I don't know, I feel that our overall markets may be just a little bit heavier, a little bit weaker. And I see us more staying in this probably 275 to 260 range. And so that 275 to 260 range, that this trade accommodates that a little bit better. I could even go so far as to essentially take out this entire spread here and end up with no downside risk at all. That's another possibility. But again, I'm going to go with this one right here. And let me just save this. And I'll call this fourth adjustment. And here we are. Let's see, the date today is the 12th. Added fourth adjustment. And again, I will save this as a new trade, and I'll copy that link. I'll share that link for everyone to pull this into your account in OptionStrat and take a look at it and just see how things play out here. So again, hopefully you find these to be a really good series. I think this start to finish, the goal is to help people understand how they can modify and adjust options trades. And again, specifically in this particular case, you can see it made a dramatic difference. Had I never done anything to this trade, I would be up 1,570 and I would still have significant downside risk, although it is a long ways away. But by making some adjustments when the market gave me the opportunity to do, adjustment number one would have put me at $2,300 right now. Adding in that second adjustment puts me at $2,800 right now. Adding in this third adjustment gives me a pretty good shot at ending this trade with about $3,300 or so in profit. And I've totally eliminated all risk of loss as I went along. So again, hopefully you find this helpful. Please like, subscribe. Look forward to seeing your comments. Take care, everyone.